everybody. I'm Theresa Carey. I've been with Investopedia since June of 2018. And for the 23 years prior to that, I was a contributing editor to Barron's. I wrote the digital investor column and reviewed online brokers for many, many years. And then when I parted ways with Barron's, Investopedia found me and brought me on board to keep doing the online broker reviews, to keep talking about tools for traders and investors, and it's been a really neat partnership. I've really been enjoying it. In September, we launched our Robo-Advisor Awards, which is of absolutely no interest to anybody in this room, but we're working on our 2020 Online Broker Awards, which should be interesting. And here's the button. Okay, I was going to go upside down and go backwards. Starting the beginning of October, I don't know how many articles now I've written about these price cuts. A lot. And yesterday, the latest one that I published is about the shifting battlefield from costs to trade execution quality, and so we'll be talking about that some. If you go on Investopedia.com right now, it's on the front page if you want to see more about that. One of the people I talk to fairly frequently is Victor Jones, formerly of TD Ameritrade. Before that, Thinkorswim, and now he's CEO of Doe. And in September, we were chatting about the launch of his Doe app, which comes out at the time. It was coming out, no commissions, $1 a month for data and content, which they've now dropped. But anyway, Victor said in 5 years, paying for commissions to trade stock will be about as common as paying for a landline. So when I was talking to him, this is what we were doing. We were looking at the pricing for the various brokers. At the beginning of September, Interactive Brokers had all of these fees, the $5 for Schwab, Fidelity, Ally, Vanguard at the bottom charging $7 for a trade. Although Vanguard has told me that almost all the trades people place on their platform are for their free, quote unquote, ETFs. They have about 1,800 ETFs that you can trade without a commission. So they don't think very many people pay that commission. So they don't really care about it. And they don't care that it's high. Anyway, so, now 5 years later, actually 3 weeks later, all of the prices are now, you could go to the Interactive Brokers Lite, which is a new offering. You can only use their web or mobile apps. You can't use Trader's Workstation to get that, and they're charging nothing. Schwab, of course, $0. Ameritrade, $0. Tracy Works has gone to $0. Blah, blah, blah. Down to Vanguard, still charging $7 because they don't care. Vanguard has said that only about 10% of their clients even place a trade in a year. So who cares, right? They're not looking for new customers. Every year when I review them, they get terrible marks for their technology because they don't care. And they've got their clients. It's really a funny conversation with them because it's like, Theresa, you're writing about stuff that our customers just don't care about. Okay, cool. Merrill Edge has an interesting thing now. If you have a $20,000 relationship with them or Bank of America and have a checking account open, it's unlimited free trading. Otherwise, they cut their fee from $6.95 to $2.95 for the other trades. And they've stopped, all of these companies have also stopped charging, except for Vanguard, a per leg fee for options. So now on options, you're just paying per contract. Vanguard is the last that only lets you trade a single leg option. And I don't know why you would do that there. So anyway, so how do we get here? It went from everything, you have to call somebody and shout out all the orders in a pit. But in the 70s, they started those first electronic displays of bid and ask prices. I had a job when I was an undergrad at an E.F. Hutton. Anybody remember E.F. Hutton? Yeah, in Oakland. And I started out as kind of my title, I wrote it down as office slave. But several of the brokers figured out I could draw graphs for them, so I became their trading assistant, and I was manually drawing price charts for them. It was super fun. But I remember the day they rolled it in, that up on the board we could see bid-ask prices scrolling across the room. And this group of little old guys would come in every day and sit down with their cigars and just stand there and watch it. It was really fun. They were great. Anyway, and in the 80s then, using bulletin board sort of dial-up technology, we got this thing called NACOnet, and that turned into, the founder of that ended up becoming one of the founders of E-Trade. So he was starting on that stuff way back then. 1992, you used to be able to dial up to CompuServe or AOL or Prodigy and go to their E-Trade. This was actually my first review of online brokers. I wrote for PC Magazine in 1992, and they type 1 for a quote, type 2 to see your portfolio. It was really pretty, how do you say, ancient technology. It was really interesting. Move up, 95, TD Ameritrade starts acquiring pieces. They were just plain old Ameritrade for a while, and then TD Bank took them over and threw that other thing in there. Aufhauser at the time was one of the few online brokers that had a graphical interface. Oh God, I thought it was so beautiful back then. Anyway, and in 96, if you were a Schwab client, they sent you a piece of paper that gave you a login and a password, and now you're all online traders. You're all online traders. Fidelity did the same thing a few months later. All of a sudden, they were counting all of their customers as being online traders when nobody was using it. And Schwab, until about 2 years ago, your login ID was your social security number, which I used to just scream at them about. And they finally put in about 2008 or 9 a way to change your login ID from your social security number to something else. And they said only about 20% of their customers did it. So I wrote a thing in one of my Barron's columns like, people, Jesus Christ, don't use your social security number. And then with the breaches, the Equifax breaches, I mean, at that point, some of those social security numbers were compromised and people were using them to try and break into Schwab accounts. They got into a frightening number. So then Schwab said, now you can't use your social security number as a login. So that was maybe 4 years ago. You can no longer use your social security number as a login. I've been watching this industry for way too long. And I wrote the first review of online brokers for Barron's in 96. And our winner that year was Lombard Brokerage. Anybody remember them? Do you know where they are now? No? So Lombard, their claim to fame back then was they offered free real-time snapshot quotes. Everybody else was giving you delayed quotes, or when you placed a trade like at E-Trade, you got 10 free real-time quotes per trade. Or you paid for them. You paid $1 for 10 quotes. I think we're going back to that now. But anyway, commissions back in the 90s, if you had a discount broker, if you were a Schwab client and called Schwab, your discount was $50 to $60 for a transaction. So online, your market orders were $14.95. Your limit orders were $19.95. They were charging more for a limit order. One of the big differentiators for me in the early years of my reviewing online brokers was who lets you place limit orders without a surcharge. It's like, ooh, that's fancy, and we're going to give you points for that. And that was part of why Lombard won. Was they were the same fee for limit and market orders. 2000s, everybody started buying everybody, and the number of online brokers. There's still new ones launching. Doe for one is a new one, and then in the mid 2000s, one of the things that just infuriated me in the late 90s was the payment for order flow. And back then, stock prices were fractions. So you might be, and brokers were saying, oh, trading's free. But they were taking 1/8 of a point away from you. So if you were trading 500 shares, you just lost $70 on your free trade. And because I wrote several articles about this for Barron's in my column, the SEC was calling me up and trying to get me to come out and testify because they'd never heard of it. And so now we have Reg NMS. It was me and a lot of other people, we were all screaming and yelling about that. Anybody remember Zecco? Yeah, there you go. So they had zero commission trades, but they had Google ads on their page, and that was allegedly how they were going to make money. After a while, they cut that to, okay, you can have 10 free trades a month. Okay, you can have 5. Yeah, you can have none. And then they were taken over by Trade King after a while. Yeah, and then Trade King got taken over by Ally. Yeah, and Don, the Trade King founder, is off in Holland doing fintech venture capital. I talk to him every once in a while. It's like he's having way too much fun. It's like really annoying. But there was more consolidation. TD bought Thinkorswim. Schwab bought Options Express. All of these things are starting to fold together, and prices were inching down. From $14.95, $9.95 became kind of the standard. A couple went to $7.95. Woo, that was awesome. 2014, Robinhood launched. I know they're taking a lot of credit for the free trades now, but if we were going to give them credit, free trading would have started a month after they launched. So I'm not giving them a whole bunch of credit. So, and they also, they're taking it from you in payment for order flow, and they're disclosing their payment for order flow statistics deliberately in a confusing way that nobody else uses. All of the other brokers disclose payment for order flow in cents per share or in cents per contract. Robinhood has chosen to disclose theirs in cents per $100 traded. How do you convert that so that you can compare it to anybody else? They did that on purpose, so you can't. And I've been hammering on them for a while on that. I don't know why this spacing turned out. That's really interesting. But in 2015, there was a group called the Financial Information Forum that's still in action. There were 6 brokers that had agreed that they would publish their trade execution statistics in a similar way. And of the 6 of them, 3 of them dropped out before it all started. A 4th one dropped out, Scottrade, when they were taken over by TD. And then Schwab dropped out because they didn't like how Fidelity was counting some of the numbers. So now the only one who's really using that format still from the Financial Information Forum is Fidelity. And then we also saw at the beginning of 2017, during my online broker cycle, Fidelity was the first one out of the box on that one, and they cut their commission to $4.95, and then everybody else followed. So we had Fidelity, and I'm literally in the middle of writing my story for Barron's, and all of the prices are falling. I'm like, okay, you guys, I don't need to sleep, I guess, for a month. That's cool. So that was, we watched the commissions come down in 2017. And but what I'm saying, and David said some of this stuff, there ain't no such thing as a free trade. It looks like zero. It's not zero. You're going to still pay commissions for stocks not listed on US exchanges, and a lot of brokers are charging the regular commissions for penny stocks. I have a list on Investopedia of the ones who are who the free trades extend to penny stocks, but there are some E-Trade penny stocks are still, you'll pay the regular commission, and Ally and a couple of others. And then you'll still pay exchange fees, and some brokers such as TD Ameritrade, they were soaking those up for you for the $6.95. That stops. You're going to start seeing these couple of pennies here and there on those trades. You're still paying per leg options fees, and some of them. The only one I know of who's below this range now is E-Option. As of November 1st, it's 10 cents per contract and no per leg fee. And Tastyworks charges $1 to open and nothing to close, and a max of $10 a leg. So if you're one of those people who likes to trade dozens of contracts in your spreads, the Tastyworks fees look pretty good because they cap at $10. I already mentioned the penny stocks. Margin interest rates, those are going up now. They're sneaking those just a little bit, little bit. They've gone up. I think they'll go up a lot in the next few months because they've got to make their money somewhere. ACAT, when you transfer your account from broker A to broker B, broker A charges you some money. I've seen a couple of those go up already. So some brokers would charge $50 to transfer a partial account, $100 to transfer the full account. That's inched up to $75 and $150. Your broker who's accepting your account often reimburses you for those, but check first before you transfer an account. See how much it's going to cost you to send the thing out. Especially if you're transferring for free trades, make sure you're getting what you think. And then David touched on this. I think we're going to see subscriptions for additional data. Right now, I was talking to my friends at the table here about how if you're a TD Ameritrade client, you can have streaming real-time data on Thinkorswim up on your computer. You can have it on your phone. You can have it on your iPad. You can be running it on multiple logins, and they let you do that. I think those days are numbered. That at some point, they'll go the way that Interactive Brokers goes now, which is you log into a second device and it says, where do you want streaming real-time data, here or over there, where you're already logged in? You only get one. Data fees, I think, are going to be the next big battleground, and I know a lot of the brokers are really pushing the exchanges hard to bring those numbers down. That's a huge cost for them, especially streaming real-time data. And if you look at some of the data fee disclosures, you'll see that a lot of the brokers are like, they're getting your figures from your real-time quotes from BATS or one of the alternative trading systems because it's cheaper. And they might not be as accurate as getting it from NASDAQ or NYSE. There's some people are running those side by side, and it's not a full quote. So if you're a data-dependent trader, which I assume if you're here, you like data and you need it to be up to date, you're going to need to look for data providers who give you clean data. Throw out the erroneous ticks. I've seen erroneous ticks take a trading system and fire off an order when that tick is a price that didn't really exist, and the person using the trading system's like, oh crap, I didn't want to buy that 1,000 shares of those things. It's so you have to watch your data. It's going to be really important. I think we'll see tiered research depending on how much money you have in your account, and they're trying to encourage you to consolidate all of your accounts under one broker's roof, just to get more of your money and more of your cash that they can earn interest on. All right, so I'm seeing 4 trading buckets coming up, and I really wanted this to come up side by side because you're all going to stand here and stare at this instead of listening to me talk. Stop. The first way that a lot of brokers work, and this is they have their order router set up to generate income for them in terms of payment for order flow. Should I explain payment for order flow? Anybody? Okay. Payment for order flow, what happens is the broker sends your order to a market maker, which is a company that specializes in trading a particular stock. They maintain an inventory of that stock. They're constantly buying and selling it for their own inventory and also to other traders. And what they do is they will pay your broker, hey, when somebody's trading Tesla, send it to us. And they'll consolidate all of those trades and trade basically either from their inventory. And then they send a little money to your broker for sending the trade to them. That's called payment for order flow. Some brokers route orders to make that as big as they possibly can. Robinhood's one, because that's how they make money when they're not charging you commissions. Their order router, that's what they look for. Interactive Brokers Lite, their new offering, which is 0, and I think they're going to have to change this. They just said up front, when you route orders from our free offering, we're sending it out for payment for order flow. I mean, they were very honest about it, and which I always appreciate. But then 3 days later, Schwab cut their commissions to 0, and they claim they're still going to use their old order router. Anyway, the next level, and this is where most of the brokers sit, the broker accepts payment for order flow if they're looking for price improvement, which means getting you a better price, a lower price if you're buying and a higher price if you're selling. And it might just be in a couple of basis points, or it could be more than that. But the price improvement is something that Schwab and TD and Fidelity are fighting like cats and dogs over right now to say, ours is the best. No, ours is the best. Ours is the best. So we're seeing a lot of this. You'll see a lot more discussion about price improvement pretty soon. Schwab and TD tell me that they don't purposely route to accept payment for order flow. They're looking for venues that give their clients price improvement. But if the payment for order flow comes in, they'll take it. Fidelity says that they're in bucket 3. They avoid payment for order flow. They say they do not accept any payment for order flow on any equity orders. They do accept it on options trades because that's kind of how the market works, and that gets way inside baseball, but I can talk about that later if you want. They tell the venue give us a better price, don't give us payment for order flow. And a Fidelity person said to me that you can't earn the ssame dollar twice. So either you're going to get it in payment for order flow, or your customer is going to get price improvement. One or the other. You can't have both. So that's Fidelity's thing. They're claiming, they put out numbers showing that on a 500 to 1,999 share block, that their clients get about $17 in price improvement on a block that size. And back when you were spending $5 on a trade, that's nice. You just got $12 in better price for your trade. Schwab and TD also have pretty good numbers in spite of accepting payment for order flow. Then the fourth bucket, which is pretty rare, and it's really aimed at hedge funds and very frequent traders, they share the price improvement, of course, and they also give you the rebates from payment for order flow. So that I am looking at all of these and thinking that the iBroker Lite product is not really worth it, because Interactive Brokers' fees are really pretty low to begin with. And this way, if you use their regular thing, you get access to Traders Workstation and you get their price improvement engine, which is actually not bad. Any questions on this before I move on? Is it good? So these are the four buckets I'm seeing. Again, these are for equities. Options trades are a little bit different. Futures trades, I honestly don't know. I'm still studying that myself. So how do you pick a broker now? I mean, price is like, who cares? I know a lot of people would tell me when I'd say, what's the most important thing for you in your online broker? And they'd go, low fees, low fees, low fees. I'm like, okay, you're stabbing yourself in the back insisting on that, but there are some other things. So right now, and as I'm designing my 2020 Online Broker Awards, I'm focusing on execution quality. The features that are allowed on a platform, and that'll include add-ons like trade ideas or some of the other great API analysis programs that come in. Are they going to charge you a fee for that? Who knows? Research amenities, a lot of these guys have got fantastic like analyst reports or other things where you can kind of check on a position you're considering entering. Real-time data is going to get to be, I think, a piece where you'll need to find out on the way in, what kind of data am I getting? I don't see brokers allowing data costs to stay as high as they are now. I think there's a lot of pressure on the exchanges to bring that down. Some of the other services that you might look at, advice from a financial advisor for some of your money, just the other nice things that a broker could do for you, classes, education, and also customer support. I'll get you in just a second. The customer support, some people find, I don't like sitting on the phone for 20 minutes listening to music. It drives me insane. So can I call them when I have a question and get somebody to pick up the freaking phone like now? Type A. Yeah. Yes?
So this is a very good slide, and I keep thinking about the first thought there, the execution quality, and maybe you can talk about how, from a consumer's point of view,
right.
It's almost impossible to really know what you're getting.
Exactly.
I want that to be known is that, they can say in the marketing whatever they say, but ultimately there's the NBBO best bidder offer. And there is almost no way to gauge what your broker is going to get you really for the end user.
Correct.
Say lots of stuff, but how do we really know?
How do we really know what kind of execution quality we're getting? That's a great question, and it's because, you drop your trade into the black box and you don't know what you're going to get till it comes out the other end. Several brokers, including TD, Fidelity, and Schwab, now give you, in your execution notification, they say, this was the NBBO, here's the price we got for you, that's X% price improvement, and this is how much money. I've seen it on a few trades. I trade for my mother in her Schwab account, and I'm seeing those reports. And she's not trading. I'm not trading for her super volatile stuff. So they're not really impressive. Where you're going to see more price improvement is in the more volatile stocks and options, because there's the spread between bid and ask gets a little more interesting when they're more volatile, and you can carve out a little piece between NBBO and outside of it. So that's one of my problems with execution quality is you don't know, and it's trade by trade.
It seems like the Tesla stocks and the Amazons, right? You're getting very close to like, well, are you winning or losing in a trade? Because that instantaneous moment,
Right.
getting the price, the NBBO is changing so quickly.
It's changing every trade.
Right.
Yeah.
So it seems like out of these things, like, I mean, because it's such an important question now for the end user. How do you pick a broker? And it makes me feel like, again, this is why we're having the summit. The platform features and the research amenities become so much more important.
They're huge. Yeah.
Because they are the differentiating factors, and people really have to be able to see, well, what is the tech, what's the additional value that the broker's doing, since there is no price value and the other stuff's nebulous.
Right. Well, we're going to do, like I said, I'm writing my scoring rubric right now for the 2020 broker reviews on Investopedia, and I'm dialing the weighting for costs way down, because why should it be weighted anything when they're all the same? And I go through this spreadsheet's so ugly you wouldn't believe it, but I go through and look which columns are people getting full credit for. That's no longer a differentiator, out. And I'll look for something else and make the weighting bigger and the scoring, the points larger also. So it's adjusting. Right now, that's what I'm working on for the next 2 weeks, is the scoring rubric. So I love hearing from people what they find most important with cost out of the picture. And let me just see. Here we are. Okay, I wanted to go to this screen that says questions. David.
We've got time for just maybe one or two.
Yeah, I'm being thrown off the court here.
When is your published report coming out, and how can people follow you socially?
Oh, socially, I'm on Twitter at TW Carey. I'm on LinkedIn. I'm on Investopedia. I have all my stuff is there a lot. I'm on the front page most days because of what is going on. Yes, sir.
Do you have any idea what percentage of revenue for the exchanges is data feed?
That's a great question. The question was, what percentage of revenue is data for the exchanges? I'm going to dig into that, and I'll tag trade ideas when I find the answer, because then if you're following them on Twitter, you can find it. That's a great question. I don't know.
Just curious the impact on their business.
I am too.
They're publicly traded.
Yeah, a lot of them are publicly traded. And I had one over here, and then I got to go, or they're going to shoot me. Yes, sir.
Is preferred price based off of order quantity?
It is preferred price based off the order quantity. The price improvement, it depends on what's available on the other side. A lot of them, if you're routing through some of the dark pools, or most brokers do publish approximately what their order router does. They're not going to throw it all out there because they don't want their competition following them.
It can only be so much, right?
It can be a couple of basis points. Sometimes, if you look at these reports, a lot of the brokers are saying, "Oh, price improves 98% of our market and marketable limit orders." Yeah, because you give them a BIP, like, whoa, that's a lot. Maybe if it's 10,000 shares, it adds up to something. But
What you see on the screen, like the gentleman was saying, you don't really know what you're getting.
you don't know.
You don't know.
And I don't think the broker can tell you on the way in either, because they're taking your order and going, okay, off we go through our order router. I mean, I look at the order routers. I get some details that they don't publish. Like, I ask whether the order router is spray or sequential. If they spray the order, they're sending it to multiple venues at once looking for price improvement. If they use a sequential router, they're sending it to this guy. What am I going to get? No thanks. This guy. What am I going to get? And so I give more points. This is part of why my rating is so weird and hard to follow. I give more points to brokers who use spray routers versus sequential.
Those are great questions to have in choosing a broker, right?
Yeah, I think so. And my review gets criticized for being too granular. And I'm like, then you do it for 24 years and tell me what you come up with. So 25 is coming. All right, thank you very much. I really appreciate your time. Thank you.